All right, what is going on, future me? Hope all is well. Obviously, want to craft my pre-market plan for this coming week, as I do with every week. Make sure my levels are correct. Oh, there we go. Okay, cool. Testing. So yeah, I just want to jump straight into it, as I do with every week. Want to again put together my pre-market plan for this coming week. As we can currently see, we have the daily for the dollar, we have the DXY pulled up on the screen, and very much as expected, right? We're looking at this sort of current price action. Excuse me. We did spell out and point out the rejection off of this bounce break level in confluence at 786 around 104, sort of 75, 77 area. And that's, basically pretty much going as planned, right? Again, resistance is still resistance, as I've mentioned, time and time again. We are currently rejecting not only the 786 and this bounce break level, but microstructures thereafter. We are reclaiming levels lower, namely this level right here at 103.65. And of course, even though we did end the most recent daily candle close on a sort of a bullish note, it doesn't have a ton of momentum, especially when you look at the preceding candle right before it. Looking like, again, a definitive move to the downside. If at the very least, we continue to travel downward and retesting 102 sort of 50 area. And from my perspective, the sort of bigger and more notable, I guess, piece of price action that I'm going to be looking forward to this week is this potential reclaim below 130. Obviously, that would confirm the bearish continuation, and very much in line with what I had mentioned in my previous pre-market plan. We also have this lower low and lower high structure forming. Obviously, we have a high here, lower low, lower high, lower low, and now a new lower high. So one would only expect, obviously, a move lower, a lower low to be put together in this current moment. We also have this ascending channel in confluence with that. So that is my overall sentiment towards the dollar, right? This does make a case for gold longs. I am still, on the fence just a bit, especially with where we're at and where we closed on the chart. And I'll get to that when we get to that. But as far as news catalysts are concerned, CPI is coming out this week. We have a 10-year bond auction Monday, CPI on Tuesday. Wednesday, we have FOMC, the rate decision, and I think this is going to be a really big week just because, again, we have CPI coming out the day before FOMC. If we're not starting to see inflation continuously start to cool down, trending downwards, right? I believe the last print was 4.9. If I don't see 4.8, 4.7, numbers lower than that, if I see a fucking 5.5 CPI print, I can almost bet the house that we're gonna have another rate hike, right? I feel like that's gonna be extremely paramount in our rate hike decision and FOMC in general. So that's something that I'm gonna be looking out for, right? If we start to see, again, inflation trending downward, that does add a little bit of substance to what the Fed has been hinting at around pausing their rate hikes, at least until, if I'm not mistaken, I heard this, it might have been an article I read or a video I had watched a little while back, but they even hinted at pausing until next year, September, or maybe it's this year. Either or, September of this year or next, they could be pausing until then, and then potentially seeing a rate cut in that September, right? So obviously, sooner rather than later could work in the benefit of the grand scheme of things, is if we are starting to see inflation act in line with where we want it to be, right? We want to see this whole 2% inflation goal being hit, this and that. We're at 4.9. If we again start to see inflation trending downwards for a consecutive month, then it's looking good. It's looking good, bruv. So that would be great. And so with that, yeah, it was super cringe. And so with that, again, I really want to see the bearish confirmation. Obviously, we have the lower high already being formed, which is a confirmation in itself, and then the daily sort of signaling of a move downward is a very big indicator as well. But overall, a notable piece of information and observation I'd like to see would be, again, this reclaim below 103 area, because as I mentioned before, this is a well-respected level for the most part in my perspective. We look at this in the monthly as well. Not a ton of content is being added here. Honestly, I'm going to be looking more towards the weekly, specifically the daily, for added context around where we're headed next. Once again, I love the sentiment that we see further downside, especially with the week that we're going to be seeing here as well. Really up in the air, honestly. We're gonna have to see based on the inflation print, so that'd really be the determining factor around whether or not we're gonna see continued dollar downside. Obviously, if CPI cools, if we see a print below forecast, then we should see further downside for the dollar. If we see a print above forecast, then it's not looking good. And then obviously FOMC on top of that, and everything else. And then on Thursday we also have what is that? Retail sales on Thursday. We also have prelim UOM consumer sentiment on Friday. So very spicy week for the dollar. Also, jumping straight into it, we have the yen here. Yen is definitely moving as planned. I've covered this week after week. We're just continuing to see weakness and continued downside. I will highlight this once again. We had this big leg up, sideways accumulation, and now we are seeing the partial completion of the next leg down, right? So sort of a upside down martini glass sort of structure, right? Only right that we see, how many times am I gonna say right? Only right that we see continued downside into the 7,200. That is our new sort of range low, as I've mentioned. Very big news on Thursday. We have the Bank of Japan monetary policy statement coming out, and as we know, we do have a new governor for the Bank of Japan, Ueda, that is going to be making decisions around monetary policy. He has mentioned in the past, I want to highlight this because this was a month or 2 months back when they printed their first monetary policy report with Ueda. He had mentioned himself that if they, even started to think about changing the Bank of Japan's monetary policy statement, in that, they move away from negative rates and start to hike rates, that their economy would potentially crash as a result. So it's something that, they'd have to be very careful with, and more than likely would not be raising rates anytime soon as a result. And so, as we've seen time and time again, the Bank of Japan is of the same sort of sentiment. They're saying the same sort of things, monetary policy statement after monetary policy statement. So I want to see, if there's any sort of verbiage that's different in this one. But honestly, I suspect that there will not be. They have had negative rates and have been printing a ton of money to buy their bonds, and as a result have been sacrificing their currency. And this is obviously, you can do your own research, paint your own narratives and everything else. But as I understand it, that is exactly what's happening. And that's the reason for the continued downside on the yen. Also, another note, the Bank of Japan also says that they benefit, quote unquote, they benefit from a weak yen. So it's only right, again, that we continue to see yen downside. Everything with the yen is going and moving along the track that we have set out here. Weekly, even more so, affirms that. Most recent weekly candle close, huge wick and upside rejection. We have a nice solid body move to the downside, and I'm just going to continue. I'm of the sentiment that we see this sort of price action continue. We're going to see continuations to the downside into 72.24 at the very least. Monthly does add a ton of context. As early as it is in the month, we're already starting to see huge downside momentum on the yen, right? Again, moving into those 7,200 sort of areas and levels, right? We had a high, a low, a lower high, and next is, inevitably a lower low, right? I can even do one of these for you guys, right? My future self. Boom. Beautiful. Let's take that off of the 4 hour. Boom. High, lower high, and then I got to get the lower low. Let's see this. Boom. Beautiful. Lower low. So it's just one of those things, and we can even stretch this out further, right? We can even bring this right here. We have a high, low, lower high. Maybe even this is a lower low potentially, right? Oh, let's move this down here. Boom. Lower low, lower high, and next is a lower low to come. So again, I'm of the sentiment that we're continuing to see yen downside, and will continue to until further notice. That Bank of Japan monetary policy statement will be big. They do like to surprise the market between the hours of 9 p.m. and 12 a.m. with the release of the monetary policy statement report. And so it's going to be something, again, to be wary of during Asian session on Thursday, because that can act as a huge catalyst for volatility, future me. So pretty much in line with everything that we've already mentioned, even more so, right? This is even better. Exactly what we've been expecting and what we've been wanting. Perfect world for the pound. I did mention last week that if we can at least maintain our heads above this sort of level, above this sort of water at 124 area, and consolidate between 124 and 126, we should be good to go for GJ longs. This is exactly what we saw. Also, another observation for the yen. We typically see upper wick creation early in the week, right? On this weekly candle close. That's exactly what we saw looking at the daily, right? We have the beginning of the week here, upper wick creation, and we saw that as well translate to the GJ chart. So I just want to outline that as well. So once again, the pound is pretty much moving as planned. Again, as long as we are seeing both the pound and the yen move in opposite directions, as long as those two currencies are decoupled as indexes in general, we should be good to go to see GJ trend in either direction. Obviously, in this particular case, with yen weakness and pound strength, we are seeing GJ longs becoming more and more valid. Something I do want to know here as well, especially with the theme of, okay, we could potentially be consolidating between 124 and 126. 126 is still resistance until it is broken, right? So if we come up here, very high likelihood that we reject unless we see, a move with momentum, a solid body close above local highs. If we do not see that, again, I am of the sentiment that we will continue to range inside of this sort of these two levels, this range low and range high, 124 and 126. Weekly does look pretty strong as far as a reclaim and move back into the 618 as we can currently see. This does technically count as a local higher high and higher low structure forming, very similar to the upside down martini glass structure we're seeing on GJ or on the JPYBasket. Excuse me, we're seeing on the pound. We have a long leg down, very short accumulation to sideways, and then a move back up. So again, as we're continuing to see these higher highs and higher lows, I would expect further upside, but again, I want to highlight that 126 is still a huge level of resistance in confluence with the 618, in confluence with this descending channel. So that's something that I would need to see broken to confirm for me. But again, as long as we are ranging and maintaining our head above this level at 124, we should be good to go for further GJ longs. And again, I want to highlight as well, because we're moving into this potential level of resistance at 126, we are at a very pivotal point on the GJ chart, and I'll get to that when I get to that. Looking at this on the monthly, not a ton of context being added just yet. It's super early in the month. It does look like we are starting to form, some sort of bullish engulfing candle here potentially, but again, I don't want to jump the gun here, and looking more towards the weekly and daily for added context around where we're going to be headed next, because again, we are closing within a range. Going to be treating it much like the dollar here, playing this thing level to level. So I hope that makes sense. Let's just move into the charts that we'll be trading. What a week for GBP JPY. It's been going absolutely fucking crazy. Let's look at this in the monthly. I feel like I've been covering the monthly cup and handle for like the past 20 months, and we are finally seeing the culmination of all of that consolidation that we've been seeing here in, ever since March of 22 type of thing. And again, as we can currently see, this measured move brings us into the 180s, also a very local level of potential resistance, right? This is held as support and resistance looking left. This is also a very nice range mid. We can even mark this off here. 178 area. Looking very good. Let's move this down a little bit. I think that looks good right there. Awesome. Yes, it looks very good. So as we're in sort of price discovery on smaller time frames, we are starting to see potential levels that we could either stop up at or reverse from for a retracement. So once again, I am still of the sentiment that this is extremely bullish, right? When we see big moves with momentum like this, though, it does make perfect sense to come back and retest these levels of structure. When that's going to happen, I'm not too sure, because again, we are in sort of uncharted territory, but there are two levels of upcoming resistance. The first being this sort of SR level at 177, 178, and this sort of bigger high, this bigger sort of range high at 188 area. As we can see, a ton of price action, a ton of instances where price is being held as resistance as well as support here as well. So something I'm going to be taking into consideration in these coming weeks. But overall, I am still of the sentiment that we should be making this full move of the monthly cup and handle, especially since we're only 60% of the way done with the measured move low to high. So I hope that makes sense. Again, overall sentiment is that we are bullish. This is the weekly. Adds a ton more concepts here as well. We are at a local weekly high. I can, drag this over and show you guys looking left. Very local level of structure here, just so I can add a bit more context around what I'm talking about. As we can see, we have a SR level held as resistance, knockback, again, deviation, knockback, and eventually tested it as support. So this is a very pivotal point in the chart, at least as far as I'm concerned, when it comes to GJ. Either we get the big continuation, and this will make a ton more sense on intraday time frames. Just wait for me to get to it. Again, we do have either two sort of scenarios. Either we see the big, bullish move with all this momentum behind it, all this kind of power behind it here as well, or we start to see these local sort of levels of resistance. Start to see knockbacks. I'm fucking going a mile a minute. The potential to see knockbacks from these levels, 175, the monthly level I'll just outline on 178 sort of area, and moving back into this potential range mid, right? There are a couple of levels of interest, namely on the weekly sort of time frame and from a weekly perspective. The first would be 171, absolute worst case scenario 168, trading this and making this a brand new range. But we could see much more upside. Again, we are seeing a ton of momentum. We did see a break and very small microstructure retest. I mean, it's the weekly, so we can't really call it a microstructure retest because these candles hold so much weight. But we did get the break retest and move higher, right? Again, from a weekly perspective, 171.15, 172 area does look like a prime spot to see a retest if we do get knocked back from this local level of resistance at 175. Looking at this on the weekly, again, adds a ton more context. As I've been covering week after week, we are just obviously seeing a very well-defined higher high and higher low structure. We have a high, low, higher low, a higher high, another higher low, new higher high, and new higher low. We also have a very fickle trend line developing, and as I've mentioned time and time again, we do have instances very similar to back here, the reverse of this back here, and on intraday time frames where we see either one of two things. This very fickle trend line starts to develop, and we start to see a squeeze and a move, a break of this level of resistance at 175, and a huge continuation to the upside. Again, we only have two really notable levels, either 178 or all the way into 188 to see knockbacks from, as far as I can currently tell. Obviously the week will tell us that, but again, as I mentioned when I was covering the pound, GJ is at a very pivotal point on the chart because not only are we at a very local level and obviously a tested and respected level of resistance here, we also have this very fickle trend line. So once again, either we get the squeeze, the pop to the upside, the break and retest above 175 into 178 and higher than that, or we start to see structures shift, right? We start to see multiple rejections at 175 and a move lower, potentially back into 172, where we want to see that retest, that very well-defined range mid on the daily. Worst case, right, we start to see that move lower into 168, in which case I would want to take the break and retest of 171, 172 area into 168 before seeing longs thereafter. And as well, it's the very same thing on where we're at currently on the chart, 175 sort of area. I want to see either a bounce or a break. I will be taking either a long or a short based on the reaction I am seeing at this, again, very local and respected level of resistance. Again, resistance is still resistance until it is broken. So I'm going to want to treat it as such. Looking at this in the 4-hour. Becomes a ton clearer here as well. We already got the rejection of 175, as we can see, to close the week off, and we did break out of a range to make this full move from 172 into 175. So again, as far as where we can look at this at a couple of different angles. Excuse me, I'm fucking stuttering, I'm going crazy. One, we start to see continued higher highs and higher lows being formed. Obviously, we have a higher high or higher low or high. Holy shit, we have a high, higher low, higher high, higher low, another higher high into another higher low, and eventually we got this higher high here at 175. So very practical and likely that we could see a potential shallow retest back into 174 sort of area, this range high that we broke out of, to make a new higher low. Or we could look at this from a fib perspective, right? We can look at this and take this swing low to swing high. Couple areas of interest, 3 to be exact. We have the 382 here in confluence with the previous range high at 174 sort of 40 area. We have the 618 local swing high to swing low at 173.75 and 174 sort of area. And then even more locally, we do have the local swing low to local swing high, the 618 in confluence with that range high, right? So there are a couple of different areas of interest for a retest and move higher. Namely, again, this range high we broke out of, or the range mid. Perfect world, right? Again, swing low to swing high. Perfect world, we have this previous range low and SR level, right? The level that we initially broke out of to make this move into 175 area. Typically, when we see big moves like this, we did see the retest here once, twice, and 3 times. We see price come back into those levels because that is the most well-respected level of structure to retest prior to moving higher. So once again, there are 3 areas of interest from a 4-hour perspective. As much as the range mid looks great, the more practical and logical areas for me to want to take longs from would be first the 174 sort of 30 area, this range high, local 618 here as well. The second being this range low, 172 sort of 85 area. And third, right below that 172 sort of 50 area, perfect world, I would wait for that retest of 172 sort of 50, because again, we have the most well-respected level of structure here. We consolidated. We had the last kiss sort of structure play out this week, and that's exactly where I'd want to bet the house that we again bounce from. Outside of that, there are going to be opportunities to short this level at 175 if we don't see the break and continuation with momentum higher. This becomes a ton clearer on the 1 hour. Again, and don't get confused by all the arrows, future me. It makes the most sense this way, and I'll explain it in a second. So again, as I mentioned in my previous pre-market plan, I wanted to short these. I did catch trades here as well. I wanted to short the break into this range, the break and retest, and move lower. I got to capture both moves into the full range, into 172.66 area. And then on the other side of that, we started to see longs. We saw a beautiful double bottom and longs. We had a last kiss sort of structure here as well before the full move into 175. So, again, as we saw on the daily, we have a very fickle trend line, as we can currently see, and it is squeezing into resistance. It's starting to move sideways and potentially start to roll over on itself, which is why I have all these arrows here, right? One of two things. Either we see the break, the continuation above 175 sort of 50 area, and they move higher, a break, retest, move higher, right? We have 178 to look at, and then 180. Look at how high this arrow is. Absolutely nuts. Very big area for price discovery if we do break into that range. Other side of that, which seems a little bit more practical, right? We start to see reclaims and retests of moves below the areas we just broke out of. Namely, again, the range how we broke out of at 176 sort of 70 area. We have 174.25, but we had the last kiss and a lot of consolidation from previous weeks. And then we have, again, sort of a last stand level here at 173.60 area. And then the very least, 172 sort of 50. So again, there are a couple different ways I want to play this, and namely, I want to play them level to level. If I start to see multiple rejections, and I start to see a break of this very fickle trend line here, that would spell out shorts being valid to me, at least into previous levels of structure where I would want to take longs from, right? Namely, again, 174.70. I would take, breaks and reset, or rather, I would take retest of this level with rejections to the upside into 174.70. I would take that level to level into the May 23 high and lower than that. The only points in which I would wait for a bounce and potentially want to get long are 174, sort of 24 area. Again, because as we see looking left, this is a well-respected sort of range mid, as we can currently see. Now turned into a range low. We have the range high at 175, range mid at 174.60, and the range low at the May 23 high 174.27. So that would act as a level to bounce from for me. So I would, again, short into those levels. If I start to see price start to bounce there, I would take that as a lower high and take a move higher. I would take longs there. Again, same thing. I would either hold it or make the move into 173.60, in which I would wait to see how we react to that level of structure. As we can currently see, as it pertains to last week, I got to short this range in between these levels at 173.62 and 177.65 until we saw the breakout of 173.70. That spells out to me a potential level to see a very well respected level of structure, right? And overall a retest. When we see, price start to coil up before a range higher is broken, we typically see that level retested, as we've seen on higher time frames. So that would also make out a level for me to want to potentially long and get a retest on it, excuse me. If we start to break below 173.60, I would then sit on my hands and wait until 172 sort of 50 area. At that point, I would consider it if, we started to see a sort of rounded bottom, sort of a bounce. But if we broke straight through that level, I would hold it into 171 and lower than that. I hope that made sense. That pretty much sums it. Again, we are at a very pivotal point in the chart. We have a very fickle trend line. We're facing resistance. One of two things. Either we squeeze, break, retest higher. I would take the break and retest of the last week candle high here. Or we start to see long wick rejections of this level of resistance at 175 and move sideways until we get the eventual breakdown, in which I would take shorts level to level until I start to see price start to reverse. And I would use the 4 hour as a guideline for that. Again, I have notable levels on the 4 hour I'd want to see a break and retest from 174.38, 172.87, and last stand 172 sort of 50 area. Hope that makes sense. Future me. I can delete these arrows. Too many fucking arrows on my screen. Awesome. Okay. Nice. So moving on into gold. And with the dollar weakness that we have been seeing, we have been starting to see gold rebound just a little bit. I'm not convinced just yet, and I'll go through that here. As we can currently see, again, let's start on the monthly. As we can currently see, we have this triple bottom here. The only way that I'd really say that this triple bottom is like no longer valid, or triple top is no longer valid, is if we break it back above this local sort of high, this 1990 sort of area. But overall, looking left, every time we get a long with rejection at this level, we get a massive move to the downside. It takes us a little bit for it to develop, but it does end up playing out. Looking at this on the weekly, the only thing holding us back from making that full move to the downside is this level of support that we have in 1930. And we're starting to see sort of morning star, sort of a reversal, a lower low and lower high, or higher high and higher low sort of structure forming. As we can see, we have a low, a high, higher low, higher high, and now a higher low if we can maintain our head above 1930 sort of area. Looking at this on the daily, as a little bit of context, we have a potential double bottom here with the 1980 sort of resistance. Once again, still a lower low and lower high structure forming on the daily, but it does look a little bit promising just on the weekly. Nothing notable per se, but with the dollar weakness, temporary longs would be valid. Although it doesn't look like that on the daily and higher time frames, it is looking like we're still rolling over on ourselves. But when we look at this on the 4 hour, it gives us basically two scenarios, right? 1956 I thought was going to be a good level to short from, but it turns out it is not. Just because there are intraday levels like on the 1 hour and everything else that might be a little bit better, namely 1969 sort of area. And this is exactly what we're looking at here, right? We have either a double top, which would be a lower high based on what we're seeing on 1980 sort of area. We have this double top sort of structure forming, and now we have a potential inverse head and shoulders, right? With the 1969 resistance acting as a neckline. So again, that does make, from a 4 hour perspective, that does make 1959 a pretty pivotal level. Either we continue to build a base on top of it to have the inverse head and shoulders play out. But if I do start to see reclaims and moves below with momentum of 1959, I am going to, again, suspect that we're going to make further moves to the downside, especially if we start to break the 1930s. So I hope that makes sense. The measured move of the inverse head and shoulders brings us back into the 1980 resistance and potentially higher than that. But the double bottom does it have a very precise measured move, moving us right into 1900s. Looking at this in the 1 hour becomes a lot clearer. It makes a lot more sense, at least for me. As far as where I'd want to position myself here as well, we closed within a range, which is ideal. We have a potential bull flag here as well. We have the big push to the upside, the flagpole. Okay. We have the flagpole, the sideways consolidation, then move downward. And if we start to break this channel, the measured move brings us straight into 1980. So I would potentially, if I start to see a rounded bottom here, I would consider taking the bounce of 1959 into 1970 and higher than that. But if I start to see a break and retest of namely 1955, because as you can see, we wicked into these levels and bounced prior. But if I see a solid body close below 1955, I would take that level to level into 1930s. 1938, 1932 sort of area. 1938 is a bounce or break level. As we can see, it's been holding as fucking the strongest level of support here, as we can see looking left. So if we do start to see a break below 1930, it's a very easy short from 1930 into 1905 sort of area. And then again, on the other side of that, I would take the potential bounce from 1959 into 1969 and higher into the 1980s. So pretty simple and straightforward on gold. Once again, I'm literally waiting for either the range break, as we can currently see here, between 1959 and 69, or the bounce from 1959 into 69, and then outside of that, the break and retest below 1955 into 1930 if we do see that. So very simple and straightforward for me. We saw something very similar here, like the last kiss sort of box. This was these two candles on Memorial Day were, I don't know, was it? Yeah, the Memorial Day candles, those were like, oh no, was it back here? Yeah, I believe there was, where is it? I think it was this. The Memorial Day candles. It was on a Monday, no? I don't fucking know, it doesn't matter. So with that, anyways, once again, it does look a little bit similar to this box as we can currently see here. We literally are just waiting for the break of this particular range. I could play one of two ways. Again, either the bounce at 1959 and play the range break, or to play it a little bit more on the safe side, I can wait for the last kiss sort of structure, the break of the bull flag, and make that move higher. Either way, it is still a good setup in my eyes. So that pretty much sums it. Once again, just to recap gold, I am waiting for either a bounce from 1959 to play this range into 1969 and levels higher. I'm also waiting for the range break if I want to either, again, I can wait for the range break to go long here as well from 69 to 1983, or to take shorts, I would take the 1955 break and retest into 1938 and levels lower than that. As far as GJ is concerned, we're at a pivotal point in the chart. We have price squeezing into 175, this level of resistance here. So we either have the potential to break this, retest the last week candle high with momentum and make a move higher, or we start to continue to reject 175 and reject, again, this level of resistance and make moves lower into previous levels of structure before seeing any sort of bounce, in which I would still entertain taking shorts until we start to see that rounded bottom or higher time frames, mainly the 4-hour. Hope that makes sense. As far as areas of interest for shorts, we have the 175 rejection into 178.68 and then 174.30 sort of area, in which I would consider longs. Also have a sort of last stand area here at 173.60 area where I would take longs. Otherwise, if we start to see continuations to the downside, I would hold off until we see 172.40 start to get tagged, 172.50 sort of area. So hope that made sense. Future me, God bless you, bro. I love you. I hope you're living your life to your utmost potential, making shit happen. Life is hard, but you're harder. Pause. This is what you do, bro. This is what you do. Continue to use your gifts. Continue to bless others. God bless you, bro. I love you. God bless everybody watching, and take care. Bye-bye.